You can see.
Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I've got Mario Stifano from Galantas Gold on the horn today, a sponsor of my show. And I recently participated in their private placement. I'm really excited about what they have on their gold projects, on their VMS project. And I also really appreciate Mario's extensive experience in the mining sector and his understanding of the economies and what's going on. That is what I think is a perfect storm for gold to go a lot higher. So Mario, thank you very much for joining us again.
Well, thanks, Alan. And again, thanks again for becoming a shareholder. I think that's a great endorsement for our project and our company, because I think, as you sort of hinted at, we're just at the very beginning of what could be a really interesting time for gold companies right now.
Yeah, I wanted to pick your brain a little bit about that, Mario. You know, you always have a good outlook on what's going on with the. I see the three key things that I see are currency wars, the banking crisis, and that the Fed is going to have to stop raising interest rates. I think there's a bunch of reasons to think those things are all happening. And I think that creates a perfect storm that will lift all boats. What's your feelings on the market these days?
Yeah, so look, I got a finance background. Those that know me, I'm a chartered accountant or chartered public accountant now. So the finance side of things is always what intrigues me the most. And you know, when you look at gold, you look at silver, it's really hard. You know, silver may be less so because it does have different uses than gold. But when it comes to gold price, it's really hard for anyone to really truly predict what the gold price is going to do, because it's not the traditional supply demand. And if someone tells you, you know, it's all supply, it's really tough. I've said that when I was at Noranda in the early part of 2000. It's hard for anyone to predict what the gold price is going to do. So you got to look at it from a macro perspective. You know, you got to take a view. The macro could take 2 years, 2 months, 20 years to get to the view you think is going to happen. But now I think everything's coming together where if you are a gold bull, and you believe the gold price is going to go up, you must if you're a gold bull like myself. You know, what's intriguing for me and what I'm really paying close attention to is the economic situation of the US. So if you go back to 2008, 2011, when I was at Lakeshore, you know, we brought that project from exploration to commercial production. I had a hard time raising money, and it was just difficult to raise money. Not like today. Today's even more difficult to raise money for companies. But when you look at the gold price, with the financial crisis, it went down. And then when QE started, QE1, QE2, then eventually QE3 started, the gold price really started to outperform. The economy got better. Gold price went down. And now we're back at $2,000 an ounce. We've had, I don't know, $9 trillion now in the Fed balance sheet. You know, is gold going to decline from here because the US economy is getting better? I don't think so. You know, I spend a lot of time in the US. I've got a place in California, that in San Diego, that I've been going to. And you look at where the economic position of the United States is today. You got $31 trillion in debt. You're probably projected to expand that debt by $2 trillion a year. I'm not even counting unfunded liabilities. And we're basically now in the US in a situation where the economy and the government is unsustainable based on the tax revenues. So what do? You got to restructure the economy. Canada did it. You know, Greece did it. Lots of Italy is going to do it. I mean, they tried, but they're going to have to continue doing it. But these economies that had to restructure had some serious negative impact to GDP, which leads to your comment about lowering interest rates. But I think the fundamental difference now for the US is being a reserve currency. The status of having a weaker economy just doesn't bode well for a reserve currency. So if the US has to raise taxes, there's going to be rebellions. If the US has got to cut their military, there's going to be rebellions. If the US is going to cut their social security, there's going to be rebellions. If the US has to cut Medicare, anything the US does to have to restructure the economy, the left and the right are so at loggerheads with each other that there is no consensus to do anything, Alan. So I just struggle to see how the US is going to get this economy back in a strong economic footing, while at the same time this reserve currency status is being attacked by all fronts, which really is what made the U.S. economy strong in many respects, is having that reserve currency. So now you've got the BRICS, you've got Brazil saying, we no longer want to be controlled. We want to be equals. You've got China saying the same thing. You've got India. You've got Saudi Arabia now trying to move away from the petrodollar. I'm not saying it's going to happen tomorrow. But it's step by step. I think the rest of the world is trying to move away from the reserve currency of the U.S. And one of the key things I noticed that, and I saw an interview with Marco Rubio, the senator from Florida. I'm not sure if you saw that. It was about 2 weeks ago. And he was concerned about the reserve status of the U.S. dollar. But his one comment was, if we don't fix this, we're not going to be able to sanction anyone. And that in itself is why the countries are trying to move away from the U.S. dollars, because of that attitude. We can't sanction anyone. So they don't want to be dictated any longer by the U.S. And you've now got, with the modernization of the world economy, Allan Barry, I think you've got countries, no one's near as strong as the U.S. as yet, but you got China catching up really quick. You've got India that's, 10 years behind China, but they're going to catch up pretty quick. Other people are now obtaining nuclear weapons. So everyone in the world sees what everyone else has. They're able to increase their technology, increase their industrial base in their own countries. So the U.S., the U.S. is no longer leaps and bounds ahead of everyone else, which, someone who's got 1/3 the standard of living of the United States are wondering why. So that's why you're seeing it attacked by all these different fronts, because nobody wants the U.S. to be rich on their behalf and then use that wealth to sanction them on anything they do that the U.S. doesn't believe in. So my view is, now going back to gold, I guess, you're probably going to have a weakening U.S. dollar. You're going to have a deteriorating financial situation in the U.S. because there's no way they're going to cut the military. That's been their key strength. They can't afford it, right? Interest rates are going up. They might start to come down, but the only way the U.S. economy is going to be able to manage all the fiscal deficits is by the Fed starting to buy dollars again. But as soon as that happens, it's in a weak economy without the path of getting stronger again. Like 2011 was quite different. QE was there to support the economy. The COVID, there was way too much stimulus, obviously, and that's been problematic. But that was, again, theoretically to help stimulate the economy. If the government does QE today, it's to stimulate the economy, but it's going to cause more inflation, more deficits. This is not Japan, because everyone points to Japan, Allan Barry. I know I'm talking too much here, but everyone points to Japan. And Japan's quite different. Japan's got huge, I forgot what is it, 220% debt to GDP. But Japan's different. Japan runs a current account surplus. It's like 300 billion a year. So that means the citizens of Japan, the corporations, the individuals, they're heavy savers, and they're just buying their own debt. They're financing themselves. Where the U.S. runs a $1 trillion current account deficit. So that means the U.S. relies on the rest of the world to finance their purchases of iPhone, oil, cars, everything, as you just pointed out. So the U.S. is relying on the world for their standard of living. The world is now saying, well, enough is enough. You've been screwing over with us with these sanctions. You've gone way too far on these sanctions. You've come out and said we use our reserve currency for sanctions. We're going to start moving away from that. And I think China's done a great job in the developing world and trying to convince them that, look, we're here for mutual benefit. We're doing this Silk Road concept. We're going to invest in your infrastructure. We're going to be there to try and help partner with you to build infrastructure. Also, we want metals, and there's going to be benefits coming to us, but we're not here to dictate how we want you to run your country. So I think that's
at the end of a gun.
Or at the end of a gun, right? Look, wars, there's been a lot of wars, right? By the Western world and the US. And they've only won two. It was something that was quite shocking to me. I read down, but only 2 wars have really been won by the US. The Korean War, and obviously the World War II, right? There hasn't really been that many wars, like Afghanistan, Iraq. Those weren't really Vietnam. None of those wars were actually won. We retreated. We met probably our objectives, whatever they were, I'm sure. but they weren't actually
One.
wins.
Yeah.
So
No, you
seriously.
bring up a really good point there. I believe the big driver of gold is the US dollar action.
Yeah,
And we saw in November that the US or September, the US dollar started coming under pressure. Gold got strong from November,
yeah,
December, January. The
yep,
US dollar got stronger in February.
yeah,
Gold got weaker. And
yep,
then the
exactly.
banking crisis came along and
Yep,
gold has shot up as the
yep,
US dollar is under pressure again.
exactly.
So that stuff about the US dollar really stands out to me.
Yep,
And the other thing is that as these currency wars are happening, all of those banks are also buying gold. And it's like
yeah.
they're somewhat creating their own gold standard.
That's the central banks of China, Russia, India, Turkey. They're all acquiring gold, and they're all trying to build their reserves backed by commodities, right? Because you know, the U.S., the Western world's got a great standard of living. You look at some of the developing world out there, and they've got great natural resources. And they've been selling, theoretically, their natural resources at a significant discount versus their standard of living compared to the US standard of living. There's reasons why, obviously, the US, its democracy, has great standard of living, technology. Obviously, there's lots of reasons behind it. But they're starting to realize now, with the amount of money the Fed has been printing, the deficit, annual deficits, the debt, and the continued increase in all of that, while at the same time, their purchasing power is deteriorating relative to the US dollar. So why am I still selling my oil at $80 a barrel when last year $30 a barrel got me, I don't know, let's call it, 100 Teslas. Today, $80 a barrel only gets me, 90 Teslas concept. So now they want their commodity prices to go up because the US dollar, there's so much US dollar out there, it's going to continue being printed. The Fed's going to have to continue backing the fiscal issues around the US. I'm not sure if you saw it or not. There was a comment that Powell made, I think it was the last or one of the, when he was in front of Congress. And one of the, I think it was a congressman, might have been in front of the Senate, but nonetheless, someone asked Powell, would your job be easier if the federal government managed their fiscal situation? And he basically said yes, right? So basically, you've got continued.
But also said,
so
I don't want to set policy.
Yeah, exactly. But basically, what's happening here is the reason why there's so many jobs, even though the Fed's trying to tighten the economy to manage inflation, the fiscal situation of the US, we got $2 trillion a year now. Again, we went down 1.3 trillion last year. We had some of the best growth and capital gains and tax revenue, still at 1.3 trillion. There was no surplus. And we're going back into an increasing deficit. So that is all stimulus, right? That's all got to stop. And the US has got to be restructured. It's going to take a lot of political pain to get to that position. I just don't know if the willpower is there within, it doesn't really matter if you're Republican or Democrat. I don't think the willpower is there to make those structural changes.
They're too far apart.
They're just too far apart. So we'll see what happens with the, with the debt increase vote that should happen. I know, I think they got to do it by July. I mean, I think they run out of cash by September timeline. So they're saying by June, July, it has to happen. We'll see how much political will there is to try and get the US restructured. If the debt limit and the ceiling gets increased without a lot of pain and concessions on all parties to try and restructure the US economy one step at a time, you're not going to do it all in one fell swoop. But if there's not some pain incurred, that is going to be a huge negative, I think, for the US dollar. That means there is no political willpower by anyone to try and get the US economy back under control. We'll be starting in $2, $3, $4 trillion deficits.
Well, I think you've helped make my case that it's kind of a perfect storm for gold.
Oh yeah, this is the macro view that I was trying to say right at the very beginning. I have no idea what gold's going to do. I really don't. None of us do. But the macro view is going to.
I sure like the trend it's been on since
That's
November.
The key. It's about a trend. I can't tell you in 3 months it's going to be $200. I got no idea. Something could happen that causes the US dollar skyrocket and strengthens it if gold goes down. I don't know. But as you look further and further out, gold should be significantly higher than $2,000 an ounce that's currently trading at today. That's my view. So I'm positioning
Well,
myself as much as I can.
and you've got a great gold project, but before we
Yep.
get into that, tell us a little bit about this VMS stuff you've got
Oh,
in
that's right.
Scotland.
So you and I never really had a chance to talk about my
No.
project in Garlock. So this was a unique project. It was actually something I was almost considering doing myself. I would have, and took this as a public co. But my again, I'm the CEO of Galantas, and I got responsibility to my shareholders. So I took it back to the board, and I said, look, this project's really good. And, we didn't like, sorry, not that we didn't like it. We actually liked this particular asset, but it was within another company at the time. And we didn't want to acquire all the other assets, which had no interest. This thing became available. So my view to the board was, this is once in a lifetime kind of opportunity where we could acquire a 10-kilometer gold-rich VMS system that's been sparsely drilled, lots of targets everywhere for about $1 million US range. That if I were to take this public, I could tell you now because Mike Gentile, for example, who's one of our larger shareholders, when I talked to Mike Gentile about this, he goes, Mario, man, if you took this public on your own, it'd be a $5 to $25 million market cap company just on its own, which I said without doubt. Eric Sprott, again, was extraordinary support. He said, Mario, don't even think about it. Just do it. Shareholders will be supportive. I mean, this is something you just have to do. So I went back to the board. I said, look, I think Galantas should do this. But if you don't, I will do it myself and take it public. The board agreed that it was something that should go into Galantas. It's a little bit different than where we are in Northern Ireland, but theoretically, we're on the same kind of structures, same kind of rocks. But what was really exciting about this project in Northern Ireland, in Northern Scotland, Garlock, is that it was drilled in the 70s by Consolidated Goldfields, which is now Goldfields of South Africa. They drilled about 9,000 meters, all fairly shallow. The deepest hole was about 150-meter depth. They were hitting things like 33, or let's call it 16 meters of 3 grams gold, 1% copper, 16 meters of 11 grams gold, 0.5% copper, 6 meters of 6% copper, 1.5 grams gold, all very shallow. There's geophysics that indicate this deposit extends to depth. The age of the rocks are the same. It's a Beshi style VMS, so similar to what the world-class asset you see in Beshi VMS in Japan, or what you see in Manitoba with Flin Flon, 100 million tons. There's outcrops over outcrops and float over 10-kilometer trend. So the British Geological Society obviously had this as a high priority target in Scotland, and they went out and tested an outcrop that was about 10 kilometers to the south. And basically, you had some sandstone cover, but the rocks did get exposed right on the southern tip of this one area. And they sampled 1.5 grams gold, 1% copper. So we now know, or we believe this is a 10-kilometer trend. There's a number of targets with float because they did run a road through here into this estate, and you can see some of the copper in the float. There's high priority targets, lots of things to go at. And if you look at Arizona Metals as a good example.
Yes, CRD.
Yes, this is Mike Gentile is a big investor in Arizona Metals, hence why I was talking to Mike Gentile about this. They peaked at what, 1.5 billion?
I think they were bought out for 2 billion Canadian.
Oh, is that what they got bought out? Just okay, I didn't realize it. Well, there you go. So we've got something very similar. And Mike Gentile talked to their team, and they think, it checks all the boxes of being a VMS system that needs to be drilled and drilled aggressively. That's all you want in a deposit, to try and see if you have something here. We're onto something because we know it's been drilled. There's a very old historical resource. Don't put any reliance on it because it's very limited drilling. Yep. Yeah, and we're going to drill this because it's all shallow drilling and it's open on strike into depth. So I think the resource is no indication of what the actual deposit could be, particularly when you add in all the other targets in and around here. But there was a resource around 600,000 to 800,000 tons of 1.5 grams gold and 1% copper, right from surface. So So
Those kind of copper things are hard to find these days, Mary.
copper, but it's very rare. And what intrigued me the most about this, and you look at VMS systems, most VMS are zinc rich, lead rich, or copper rich. They're very with obviously credits in silver and gold. There are very few VMS systems that the primary metal is gold, and this is one of them. And that's what's most intriguing about this. It's a gold-rich VMS. So LaRonde, which is, you look at Agnico Eagle's project in Val-d'Or, slightly older rocks, but again, very rich in gold. Flin Flon had some deposits there, some large ones that are very rich in gold. Beshi, very rich in gold. So they were actually the Horn in Gaspé area of Quebec, that produced 30 million ounces. That was a gold-rich VMS. Right, so it's very hard to find gold-rich VMS where gold is the primary metal. That is what intrigued me the most about this. Is, I've seen a lot of deposits. I'm a finance guy, but I've come across a lot of things. I just haven't seen a lot of VMS systems that you have gold.
Well, the other interesting thing about that, in the zonation of grade in a VMS, if you get high gold, you're usually going to get high copper as well.
Yes.
So yes, you've got the best of both worlds there.
You got the best of both worlds, and it's wide open. We locked up this estate. We have 5 years of, well, look, we could work this area for 30 years and then get 20-year renewals. We already prepaid 5 years of access. So I'm pretty excited about this because I think it's one of those deposits in a normal situation. It's not something that I would look to do. But because this became available and the cost of acquiring this asset was just so compelling that, if we didn't go after this, we would have been idiots in my mind.
Mario,
so if we were able to pick this up for that cost, it was brilliant on our end, I think.
Tough markets make for good deals.
Exactly. And this one here has a shot to be something because I already know there's 9,000 meters. They hit, every hole hit. And, there was only one hole since early 80s, only one hole was drilled. Since then, in a private company, it was drilled in 2018. Just one hole, nothing else. There was no money in this company. It was a private company. But again, they drilled about 16 meters of 1 gram per ton gold and 1% copper range as well. So again, that's it. Nothing. This thing hasn't really been touched since the 1970s.
What I love about VMS deposits as well is that I spent a lot of my career in diamond exploration, and these are volcanogenic events that start in the upper mantle and they come in clusters. Yes. And volcanogenic massive sulfides are the same kind of a story. Where you find one, you usually find more.
Hence why we got all these targets already identified based on the work that's already been done for us by the British Geological Survey. They already mapped out zones with high grade copper, cobalt, zinc. They did all the zonation. They identified all the targets for us back in the 90s and 2000s. Wow. So they wanted someone to do this, but no one looked in Scotland. Look, I talked to a couple of geos. One of their comment, I had no idea, and their comment was, I had no idea there were VMS deposits or systems in Scotland, right? Because they're old age rods, all the Appalachian, all the way from the Carolinas into obviously
Newfoundland,
Greenland, Ireland, Scotland, UK, all that, right? So it's all the same rocks, but no one's gone there to look for these kind of deposits. And we locked up 250 square kilometers in this area. So
one other thing I wanted to ask you about that deal. How does it work on the gold end of things?
Yes, Crown Estate.
Yeah.
So basically, the way it works in the UK is anytime you get precious metals in your deposit, you have to pay a royalty to the Crown Estate. It could be anywhere from 4 to 6%, depending on how much you produce. That basically goes to the Crown. In this case, it would be King Charles, right? So, that's the whole concept in the Crown Estates, and you just get approval from the Crown Estate to mine the gold, which is never really denied because, they get the revenue from it. Base metals, it's basically held with the estates, the landowner. So in this case, we have the agreement with the landowner for 5 years. He's a great guy. His name's Duncan, and He's been extremely supportive here, and he gets a royalty as well on the metals, or he gets an NPI once we go in production. Either or for us, I think is a great scenario, because when it comes to permitting and approvals, this ground is owned by one estate for over 400 years. And they want to see this into production. They want to do some hydro facilities on their ground. So they really want to, there's a lot of patriotic people in Scotland, right? The Scottish are extraordinarily patriotic, and they want to see their country developed, and they want to see it be successful. I shouldn't say their country. I'm probably politically incorrect there, but they want to see Scotland be developed, and so you've got a lot of opportunities in this area to find these kind of deposits. And I think you're going to start to see, just on what I'm aware of now, much more so, you're probably going to start to see a lot more exploration for base metals in Scotland. A lot more. There's nickel there. There's copper there. There's obviously zinc, gold.
I think I got this right now. So you did the deal with the local landowner that covers the base metals, and then for the precious metals, do you have to do some kind of application?
It's just an application. It's already been, before we already got the approval, there was something that had to be done to remove the prior royalty holder on it, and that's all been cleaned up. That's what took us. It took me about a year to put this all together. So now it's just a matter, I believe, it should be within the next month, we actually get the formal approval by the Crown Estate that we'll be able to mine the gold. That's all it is. There is no issues there. The Crown Estate will never deny you mining the gold. You just got to go through the process.
Hey,
you got to make sure.
Give me a 46% royalty, and I'll give you approval too.
Yeah, but it's even more simplistic than that, because in order to get the approval of the Crown Estate to mine the gold, you got to get the landowner's approval. So we got the landowner's approval. No one else could ever get the right to mine the gold, because only we can mine that deposit in that area. Right. So that's why you got to get the landowner's approval first, get them all signed up, and then you do your formal approval through the Crown Estate.
So you're going to end up looking for everything, gold and
oh yeah, in that area. And there's other areas in Scotland too as well that cobalt. There's a big cobalt anomaly in a few areas here that we don't really understand. There's cobalt, we believe, in the core, because the British Geological Society identified it. And then they did some sampling for cobalt. I don't know how cobalt fits in all of this. It could be there's another, maybe this is a much richer copper deposit in another area. You do get a lot of copper and cobalt at times. Maybe there's a nickel project somewhere. I got no idea. I'm not a geo, but I got 250 square kilometers to figure it out.
Excellent. Well, let's get on to your big driver of your valuation, I think, is your stuff in Northern Ireland. And I'm a huge fan of orogenic gold systems. Part of the reason is that you look at Fosterville in Australia, when the Kirkland Lake got into mining that deeper stuff in the Swan Zone, very high grade, very low cost, cash flow machine, free cash flow machine. Same story in Red Lake, Ontario with Gold Corp back in the day. And by the way, you have the Kirkland Lake guy as one of your advisors.
Yes. Okay, so you look at what we have in Northern Ireland, just look 20 kilometers to the northeast of us is a world-class deposit, Dalridian. It was sold in 2018. I know you're an investor in that project as well, hence probably why you want to invest in our project as well. Exactly. So, they got sold at 2018 for about 550 million Canadian. At the time, they had 6 million ounces at 13 grams. Unofficially, I've heard from individuals that's probably 10 million ounces at 13 grams. It is a world-class asset. That asset will likely be sold and or listed as a IPO once they get their permit, and they're in their final stages now of getting their permit, because it's now in front of the 3-judge panel, and then it goes in front of the minister. There's no reason why this is not going to get approved. I think the minimum valuation this thing is going to get, based on what I've heard from a number of people, is 1.3 to 1.5 billion US. That's probably the minimum. I think it'd probably be more than that. There's just no deposit.
How many of those are there that are 13 grammars?
Nothing. There is nothing.
No.
Right. So we're 20 kilometers away, exact same system, but a small fraction of the amount of drilling that Orogenic would have had, because the strategy was quite different back then for Galantas. So we've been, now that we're starting to understand, and keep in mind, our deepest hole still here is only 300-meter depth at one vein, and the Joshua vein, which is the higher grade vein, because the resource there is about 10 grams. The deepest hole there is about 180-meter depth. So we've got over 500,000 ounces in resources at over 7 grams. But that resource does not incorporate what you've always referred to as those dilation zones, where we seem to be getting better grades and thicker widths where the veins swell. And we've been pretty good at predicting where these veins may swell on the Kearney vein, and hopefully the Joshua vein. We're going to be targeting that as well with our most recent drill program we just announced. So as we continue to drill here to depth and on strike, and on north and south as well, you know, we're pretty confident we're going to continue to really build this resource, because we've only drilled 2 veins. That's it, and very shallow. And you look at Orogenic, you're very familiar with Orogenic. When they came out with their 6 million ounce resource, they drilled 26 veins. And you know, I don't know how many veins they've drilled now to get to. Again, it's not official. I don't know for sure if it's 10 million ounces, but I've heard that from a number of people. They would have drilled probably more veins and continue to expand their veins to depth. We've identified 16 veins and only drilled 2 so far. You know, this thing, even at our project, extends over 5 kilometers and probably extends beyond that based on the amount of showings. In and around the core area of the Kearney vein, the Joshua vein, in between there, with this drill program, there was hints that there is a vein to the south called the Kerr vein. And this was in the open pit. And we drilled one hole,
Joshua and Kearney,
almost right in between, and it looks to be in the same structure, north south. So there was smoke there, showing that there could be something there. We drilled one hole. We didn't hit anything ore grade, but we got more smoke, which was sulfides with galena, which is exactly what we see in our other veins. So, you know, our view is we got a shot to find another vein in between the Joshua and the Kearney vein, and it's probably there. I don't know if we're going to find in this drill program. Knock on wood, we do. But our drill program is now designed to test the Kerr vein, and those holes are going to be angled such that we can test the Joshua vein at depth and see if we can pick up those dilation zones and continue following them at depth. Because if we can do that with those holes, then all of a sudden,
show you, Mario, that I not only do I do my homework, but I stay focused on things. And
yeah.
What I think is very important for people to understand is, first of all, these orogenic systems go very deep. When you're in the top portion of it, you're in the extension of the system. And what you find there is the fine-grained portion of an orogenic gold system. Mm-hmm. And you're already getting, in that fine-grained gold, very good grades, okay? Yep. I don't know if you remember, but back in the day when Gold Corp would go to the PDAC, they'd have a booth and they had a display there, and it showed some specimens from deep.
I remember.
And the rocks were like this big, and it looked like half of it was gold. Yeah. That's your coarse grain component.
Red Lake. Yeah. Yeah.
So you guys are still way up in the system, and you're already hitting handsome grades. Now, targeting and how you go deeper is what really excites me, because you mentioned the dilation zones. So you've got this area and you're in the top portion of it, but you're getting continuity of those dilation zones in a few different areas.
Exactly.
And that is pointing you where to go deeper with confidence.
Yeah, exactly. That's exactly it. And look, you pointed out something that's really interesting. You know, we've got a lot of work ahead of us to at our project in Northern Ireland, because we think this is a multi-million ounce deposit. But to the south of us, we think is the actual source, right? Because there's indication it's deeper, which shouldn't surprise anyone. But once you start to figure all that out, as you just said, when the fluids come up, as we get deeper and you get these, you're going to find jewel boxes. You just are. The question is, where are they? And this is a very old system. Look, one deposit has 10 million ounces, right? That in itself is a world-class asset. You've got our deposit right next door, similar kind of grades that they were seeing near surface. We're now hitting those 13 meters of 17 grams and 7 meters of 30-gram type material. We're pretty confident as we continue to drill this out, we're going to have a multi-million ounce deposit. It's just,
Well,
it doesn't take rocket science to get there.
I got some more reasons why I think that's going to happen. Okay, so now you've got these veins that are all tightly packed. Okay.
Yep.
And when you have them tightly packed, and just to the immediate south is that deep crack in the earth that you're talking about, which is how the gold bearing fluids, the path of least resistance that they follow, and then they blossom out into these zones or veins. Yep. And you've got a bunch of these veins that are tightly packed in close proximity. What will likely happen as you get deeper is that they all come together in close proximity to that big crack.
So I'm showing you the palm in my fingers, right? I mean, that's always been the concept of some of these orogenic deposits. When I was at Lakeshore, the same thing. We know at the time, I don't think it's been found as yet, but the Timmins West deposit, Thunder Creek, were fingers, right? The source is, where the hell is that damn palm? Well, there's a palm here, right? Yes. All these individual veins are your fingers. And maybe in this case, one vein, there might be 30 veins. There's one finger is what I think we may have here when it's all said and done. But when you start to figure out where the palm is and you get those big, thick, high grade material there. Oh yeah, we're going to find it. Because to your point, like, we get no VG yet. We have never seen, even though we're getting those kind of grades, we have never seen visible gold. It's there at some point. As you get deeper, I will bet you anything you're going to get, as you just said, more nuggety, more coarse gold.
Because you're getting closer to the heat engine.
Exactly.
And so far away from it, you get disseminated and fine grained gold.
Exactly.
As you follow it deeper, it gets coarser and coarser. And you guys are already getting good grades in the fine grained portion.
Exactly. You mentioned it. Look at the Swan Zone. Look at Macassa. These things, as you got deeper, they became world-class assets. Like Macassa was owned by Kinross and other companies, but it wasn't until you got deeper that you start getting the 20-gram type material, right? We're already at 7 grams, and we're starting to hit those kind of grades at 200-meter depth type of concept. Once we're at 5, 7, 8, 9, 1,000-meter depth, I have no idea what we're going to find. But I know when it's all said and done, this is going to be a large multi-million ounce deposit. It just has to be. I see so many veins here, so many old drill holes,
and so close together.
Yeah, it all holds together. So I'm pretty excited with what we have here. It's one of those. That's why we have Eric Sprott, Mike Gentile, right? Ross Beatty participated again in this financing. Right, we've got some of the biggest investors in Galantas on the belief. And there should, it takes a lot of work to get there.
Got Tony McCooch as an advisor, and he knows what these things looks like.
Exactly. So we think we got a multi-million ounce deposit. We're going to continue drilling it. We are looking. I should update, as I said. We had to do a short pause because we're trying to figure out how to get our development in place so that we can mine some of these higher grade stopes. Mining in the UK has been extraordinarily difficult in the short term because we just can't hire employees. We've been struggling to build up our workforce, and we've peaked at 19 employees, miners, I should say. We obviously have more employees, but 19 miners. At the time I had to make my decision, we had 16 miners of the needed 30. So we were struggling because we had 6 core guys, which are fantastic. But, the rest of the team, we would hire them, train them, spend a lot of our time and effort training them, and then they would leave after 2 or 3 months. It takes a certain character to work underground. And if we can't bring people outside of the UK, it was just extraordinarily difficult it was just constant turnover. And, we'd have to supervise everyone because when you're blasting, they're not experienced with blast. There's, you do something on paper, but when you're live underground, you don't want anyone that doesn't have experience when it comes blasting to be blasting and being around things without having experienced people around them all the time. So our guys couldn't do what needed to be done because we're constantly supervising and training everyone because of the constant turnover. So we're gonna move towards full contract mining with a group called QME out of Ireland. So we're working on a plan to try and get them back underground and figure out how we're going to mine this. And we're going to try and do it with less explosives. That will require less supervision. We can use some rock pickers here, we think, because they actually use that at Orogenic in some areas as well. So hopefully, if that's the case, we can probably do this with less miners. But what's interesting here is, we planned our 10,000 ounce for the year. When you start factoring in some of these dilation zones, there are stopes in there as we get deeper that we're getting, 15 to 20 grams out of. So we got to get in there. We got to start mining this, right? So we can start getting that cash flow. But we got to do it when we know we got the full employee complement, because otherwise we're just, the gold's still there. There's no rush. We got to get the contractor.
Well, and they got you that underground working, so now you can drill off of the underground.
Yes. So
working.
that was sort of the view. I just told the board, look, we're struggling trying to get a complement of employees. Let's take the advantage. We got all this. We got our mine rescue team in place. Let's start drilling from underground because the Kerr vein is 20 meters away from the underground workings as well. And we've got to get over to Joshua now. So, if we can get 3 working faces here with our contractor, then all of a sudden, where we're talking about 10, then going to 20,000 ounces, if you got 3 veins being mined, then you go from 20 to, 35 to 50,000 ounces quickly. So that's the whole concept here of we're going to drill these off. At the same time, we got QME working on a revised mine plan so we can develop deeper. And the benefit of that as well is we'll use the waste rock for backfill rather than, basically using that waste rock again is going to reduce our costs. It's going to reduce the amount of shotcrete you need to use. And we think that's probably the best way with a limited workforce on how to mine this. So, but in the meantime, we're just going to drill, and show the market that we're a multi-million ounce deposit. And look, we got great endorsement by also yourself, but a lot of people continue to support this, from the Mike Gentiles to the Eric Spross to the Ross Beatties to the Melcourts, the Ocean Partners. Look, we think we got a multi-million ounce. It's one of those rare deposits that every indication is just expanding this deposit down to 1,000 meters gets you to 1 million ounces without even finding anything new. Right?
I'm very confident along the way that you're going to bang into a bunch of jewelry boxes.
Oh, me too. And I think we're going to find more veins.
Yeah.
I mean, all along here, right? We just to the west of the Joshua vein, there's another vein called Kestrel, a few holes. But you'll sort of see hints of it in some of our slides. Again, some very high grade there, a few holes that were drilled.
Right beside it.
It's right beside, but it's never been followed up, right? We just never had the opportunity to follow up on it. So
that blows me away that all of these veins are in such close proximity, and right to the south of them is the big crack in the earth, and the model is coming together.
Yeah, it's all coming together. Just time. We got to continue drilling. And look, once we can show, I mean, from an investor perspective, I'm an investor, you're an investor. When Dalradian gets sold, and you've got every major mining company likely to bid on it. And if they don't get the value that Orogenic thinks it's worth, I'm sure they're just going to do a direct IPO. But everyone's going to be looking at this, and they're going to scratch their head and say, Jesus, who would have thought you've got a 10 million ounce, 13 gram deposit in this area? And wait, 20 kilometers away, you've got Galantas has been drilling similar things. They're probably 8 years behind where Dalradian is, and they're drilling, but they're already at over 500,000 ounces and continuing to grow. And everyone's eyes are going to be on Galantas. I'm extraordinarily confident about. So,
well, I can't keep my eyes off of it, Mario, because I love orogenic gold systems, and I watch them all, and I look for certain milestones to have those grades in the extension of an orogenic gold system. To have all these veins in close proximity, to have those dilation zones that are all pointing towards, here's where you go. that model is all coming together, and I think it's just a short period of time before you start hitting jewelry boxes down there.
Exactly. And finding more of these veins. That's why everyone should keep paying attention to Galantas. That's not very,
Well, I'm going to do everything I can to make sure that happens, Mario. Did you have anything
I'm glad for your support. I'm really happy you participated in the financing.
You got anything you want to close on, Mario, or do we?
No, I just look. We'll continue these chats, and as I said, pay attention to gold. I think the macro environment is such that gold's going to do extraordinarily well. You might get a few blips here or there, but everything's pointing to a much higher gold price. Time will tell what it's going to be. I'm not going to predict any particular price because I think I'd be foolish to. But I'm pretty confident we're at the trend where gold's going to continue to increase and significantly over time. And then Galantas best position.
Just so hard to find.
Exactly. Galantas is best position to capitalize on that because you can find high-grade gold anywhere. And we got it.
Let me close it off. Mario, thank you very much for your time. You've been very generous.
Thank you. Appreciate it.
Okay, folks. So in Galantas, you've got a company that has now 2 excellent projects. Their key gold project, the Oma project, is I can't believe that more people aren't as excited as me, but then I do a lot of homework on these things and I watch them like a hawk. And I think they've got a special orogenic gold system. And as Mario says, you're not very far from a 10 million ounce, 13 gram deposit. You can find 10 gram gold deposits, but they're usually about 1 million ounces. Those aren't big enough for the majors to get excited about. You're in an area of elephants here in the right age of rocks. You got the right structural story. You got the right grades. You're at the top of the system in the fine grained portion of it, and you're already hitting excellent grades. You've got all these veins closely packed together. I think they've got something very, very special here. And I do believe strongly that we're in a gold market, that the boats are going to start rising, and some boats will outperform others. And that's what I think Galantas is going to do. And I'm glad to have participated in their recent private placement. And my little good housekeeping seal of approval doesn't mean as much as Eric Sprague, Gentile, Ross Beatty, all these other groups, but I think you want to keep a very close eye on Galantas and do your homework. Go to their website. Go to my YouTube channel at Rocks and Stocks News. Mario and I have had plenty of conversations on there. And do that homework. Look at those news releases. Look at their corporate presentation. Check out how everything is lining up. I love it. On that note, have a great day, and we will talk to you soon.